everybody. Welcome to Chelsea Groton Bank's Facebook Live. Today we're talking about convertible or clunker. This is buying your first car and it's appropriate for high school age students. My name is Miria Gray. I'm the Community Education Officer here at Chelsea Groton Bank. And we are coming to you every day with some different lessons for different age groups. So let's get right into this. So, when I want to go out and I want to buy a new car, I might really want this car. This is a really nice car. This is my dream car. I'll be out, speeding around in this car. Unfortunately, this might be the car that I can afford. So having a budget in mind when you're thinking about purchasing your first car is really important. We can't all go right out and buy our dream car. We have to put in some thoughts into how we're going to make this purchase, what costs might be associated with it, and what the overall car is going to cost us. We need to think about our needs versus our wants. Our needs: a reliable vehicle, good gas mileage, and it's safe. And our wants might be a brand or a look that you like, that it's new, and then it has all the bells and whistles. So when you're starting out, your first car might only need to be able to get you from point A to point B. Most reliable vehicles can get you from point A to point B. When you're starting out, you might also want it to have good gas mileage. Gas is very expensive. If you get something that's a gas guzzler, you're going to have to spend a lot in gas to get where you need to go. And the last one is safe. You would want your vehicle to be safe, because while a convertible is a really nice car, when we're first learning to drive, that might not be the safest car for us. Our wants are things like, I know my first car wasn't exactly the car that I dreamed of. I did get it from the same dealership that I saw my dream car at, but it definitely wasn't the same car. And it definitely wasn't new. And it definitely didn't have all the bells and whistles. So as you get older, you can trade up, but oftentimes when we're younger, we kind of have to take what we need versus what we want. So let's talk about what the true cost of a car is. All right, what can I afford right now? So that's really important, okay? What can you afford right now? That's important because you have to decide whether you can afford a monthly payment or not, or if you need to save up your cash and buy it outright. Do I need a car or do I want one? We talked about needs versus wants in the last slide. Do you need a car or do you want one? Do other people in your household have a car you can borrow? Do your schedules match up so that you can do that? Can your friend drive you where you need to be? All of those things come into factor. What amount can I pay each month? Okay, that goes right to what can I afford right now? Do I have a job? How much can I afford to pay? If you only make $250 a month, can you afford to pay $250 a month? Probably not. There's lots of other costs, like gas. I forgot about gas. How much will that cost over time? Okay, if you only make $250 a month, you can't pay $250 a month because you won't be able to afford gas or repairs or maintenance. If you're not buying a new car, chances are you'll need more repairs and maintenance. Should I lease or own? So that's a pretty good question. And we'll get into the difference between leasing and owning in just a little bit. How much will insurance cost? So insurance is a monthly cost also. So you have your car payment, your gas, and insurance. How much will I need for a down payment? if you're going to buy a newer car or, make payments on a car every month, there's going to have to be some kind of a down payment. How much is that going to be? And what can I afford 1 year, 2 years, and 5 years from now? In 5 years, you can probably afford a much different car than you can afford now. So thinking through what should you buy now versus what can you trade up to in 5 years is a really good question to be thinking about. All right, secured or unsecured? So if we were going to go get a loan for a car, even if it's not a new car, oftentimes people can't save $5,000 for a car, but they might be able to make the payments on a $5,000 car every month. There's two different kinds of loans. A secured installment loan is one in which you have to offer collateral for the loan, which we had talked about in our credit class. So collateral is something that you would put up on this car. Okay? Do you own another car? Do you own a piece of property? Do you have a really big bank account somewhere? You must give up the collateral to the lender if the loan is not paid back as agreed. The interest rates for secured installment loans are comparatively lower than unsecured loans. A car loan is an example of a secured installment loan, right? Because if you were to buy the car and you don't pay for the car, they're going to take the car back. An unsecured installment loan is a loan that's not secured by collateral. An example of an unsecured installment loan is a student loan or a credit card, okay? They don't ask you to put up anything up front for a student loan or to get a credit card. All right, a cosigner. So many of you might say, well, I will just get my parents to cosign my loan for me. But what does that really mean, and do your parents want to do that? So cosigning a loan means that the cosigner is sharing full responsibility for its payment in much the same way as if they had taken on the loan for themselves. A cosigner is not signing on simply as a character reference. If you don't pay your loan, your cosigner is responsible for paying it. So many times, a parent might be hesitant to be a cosigner if you don't have a job. All right, and it's important to shop around, okay? When you're looking for a car, you shouldn't just buy the first one that you see. It's important to know how much a vehicle will cost you once everything has been added in and what your monthly payment will be. I really like CarMax for an example for you to go look for vehicles, because when you look at a vehicle on CarMax, it takes into account what your credit score is. Now, if you're younger and you don't have a credit score, right now it's selected as good, but you're going to have to downgrade that from good to probably poor. It's going to ask you how much you have for a down payment. So if you've saved up some money, you can put that in there. The length of the term. So how long are you going to be paying off this loan? 3 years, 5 years, whatever it might be. And then it takes into account the vehicle price, the estimated tax and title fees, which, in Connecticut, you're going to have to pay sales tax on that car. Subtract out your down payment and the total financed amount. Then it's going to tell you what your estimated monthly payment is going to be with your estimated APR, your annual percentage rate. So at this, it's between 5 and 8.5% for just good credit, okay? So looking at something like CarMax will give you a really good idea of how much your monthly payment would be before you walk into a dealership, okay? Oops. I had said that we were going to talk about the difference between a leased or an owned vehicle. So the difference between a leased and an owned vehicle is that a leased vehicle you have to turn back in at the end of your lease. So at the end of your lease, you would say, here's my car back, and you would give them the car back. So basically it's like renting an apartment. You get to use it over time, and as long as you don't damage it, they'll take it back and you can have another lease. Typically, the payments are a little bit less than if you were to buy a car. Now, if you're to buy a car, you're making payments towards owning that car, and then when your payments are all made, you own that vehicle outright, and either you don't have to pay anymore, or you can trade that car in as part of your down payment on your next vehicle. So that's the real difference. Sometimes, especially younger people, I wouldn't recommend leasing a car. They're a little bit harder on their vehicles than older people, and you probably don't need a brand new car. But if you do, for some reason, a lease is usually the less expensive option. But you're really just paying the dealership to borrow their car, and you're going to have to turn that back in at the end of the lease. We hope that you have had a great afternoon, and we hope to see you tomorrow. Bye-bye!